All right, it's David here with Futures Trading. Josh, I want to answer your question this way. All right, so if you don't mind, I'm going to do it this way for you. I know you had just asked me the question, but I want to visually give it to you because there may be others that have the same concern about what it is that's going on. And I want to make sure I answer it this way. I just want to do that because I've done this before for other people, and I'll do it for you as well. I want to make sure you get the information that you need. It's really important that you have that. And again, I want to make sure I satisfy it for anyone else that may have the question. Again, thank you. Great question. I'm glad that you were able to comment. That's important because I want to make sure you guys understand what it is that I'm promoting. It's practical, just practical information, stuff that you can take with you and know that hey, this should work. I mean, it's showing up all the time, and we'll take a look at that. Do forgive me, I did X out of my workstation from the videos on yesterday because I hadn't really planned on coming back. So you'll have to look at some of the information from my workstation, and it's pretty much the same stuff. I'm gonna be honest with you, it's nothing really no different. But this is the chart from the video of yesterday. This is the chart from the video yesterday, and this is where they were at. Okay, and then of course after the video, I had to come back and tell you, hey, look, the prices kind of changed on that market analyzer. It had changed a bit, and I wanted to give you the prices for today, and that's why I told you, hey, you can know today, what's the bias for tomorrow. You can know today, and that was yesterday's video. And so we'll take a look at this really quickly here. We'll take a look, and then I'm gonna dive into what it is that you had asked me about, which is because I know how I was covering that before. All right, so now we're going to just take just a really close look, and I'm gonna read that to you a little bit, just so you have real clarity as to what it is. I believe the videos from yesterday, and of course, I don't know if I really drove the point home, but I'm gonna do it today. I'm gonna do it today. I thought I did on that first one, but I know yesterday. I don't know if you were able to get that far. I don't think you did because you was commenting on the first video. But nevertheless, I'll cover it again. I'm gonna cover it again and make sure that you have it because I want to make sure it's plain, really plain for you because it's simple. Now this is that same. This is that same information. It's just my stuff is on this chart, but that darker zone is from the red bar. Okay, that's from the red bar. That's where they shot up yesterday with the FOMC who was reading it, and they went on up there. And I told you you're not out of the neck of the woods. You got to see if they'll close above that. And then of course we had the zone here from this bar here where they attempted to go down, but they didn't break the back of the bar, and they came back up. And of course they never closed beneath that lower level. They never did that. And then, of course, this morning, here's your nasty business from the zone that I told you on yesterday. You can know today's bias. Yesterday, you could already know this is going to be a problem going into today. So now let's take a look at some of that. Now, the levels. Now, we'll say this. The levels that I have on the chart, the 48, 428, that's this. That's all it is. It's the back of this range low here. So that's all, 428. All right, 428.75. All right, so now I'm sorry, it's here. Hold on. Let me refresh this, reload this. That's that I think it was 428, 428. Yeah, 428.75. That's that. Okay. And now that 47, that's this. Okay. So that's that pivot range low here. That's that 47 here. And then, of course, we have that 45, which is that high of that range. So that's the high of that range. That's that low of the range. Those are those lines. Now, what I'm going to do is I'm going to blow the chart up here, and then we'll go back to the 930. Again, all the text, color, and all that stuff. That stuff I've coded, levels, all of that. But this is simple. This is simple. Those are the levels. Okay. So we had, of course, yesterday's information. That's this first line here. That's from that green zone that they kind of hit yesterday and then rallied off of that low and went up to test that big red bar. Now, this is the low level, okay, from yesterday's bar, and then that's the high level from yesterday's bar. Now, I'm gonna just scroll back to 930 here. Where's 930? Okay, it's about right. Yeah, so right there, that little teeny bar right here, they shot up, and I caught that short right here. And then they just kind of worked their way down. I knew where they were going. They were coming here. That kind of makes sense. Chase everybody out of it. That's all. And then, of course, they played the backside of this level, and then there's the break. All right. And then they pulled up, and I knew they were headed there. All right. So they filled that little gap. All right. So there you have it on that. Now, the level now, you want to see if they can close at least above here, maybe. Can they do that? It'll be ideal. Now, I'm gonna tell you what'll be ideal. If they can get up here and close above the 645, that would be special. I mean, absolutely special. Don't kid yourself. That would be great. Again, there's only a couple of other things in my workstation that wasn't in the prior video. It's nothing really. It's just some better volume, and then you got your little big tray stuff. I told you this. I think these guys, let me just say that I think these guys at the MZ Plays really have some remarkable stuff, and I can't use none of it because I can't understand all of it. I can't. So I just use the little dots just to look at it with my my information here. And again, the color that's in here is not the color up there, and the levels in here is not the levels up there. They're different. But just this is my stuff. This is what I've coded. The pressures, all the arrows, bar color text, all this stuff you're seeing in here. And I just use the little dots and a little volume here just to see, you know, the pickup. That's all. Are they picking it up? Don't need that stuff. So now let's go take a look at, you don't need that stuff. I'll prove it to you. Let's go look at this chart here. All for fun. That's all it is. You have this stuff and, you know, I purchased it. I said, well, I'll take a look at it. Now, let's see. I want to know what's out there. Everybody using stuff. I figure I'll use it too. All right. So let's go. You can use whatever you want. Trust me, you can. I'm just trying to give you some practical information that you can utilize, and you don't need all of that. That's all. So off the bottom, you know you had a downtrend here. There's not an uptrend here. We can count it, but I don't think it is. Let's see. 1, 2, 3, 4, 5, 6. No, that's not it. So yeah, we only have 6. They took another dive. All right, so now let's count this. 1, 2, 3, 4. Yeah, let's go 5, and that's 6. Now they can very much just pull back, create your center of your trend here, which will be, let's do the whole package. All right, let's do the whole package. The center of the chart right here. All right, since I'm going this way and coming back in here and doing this, let's do it this way. You got the lower part of your chart here, and you got your upper part of the chart. We're going to just kind of bring all the information together. All right, let's do it all. All right, so they can get cyclical at the center and come back down, but you don't want them. If they got 6, that's pretty good. They might make 7. So let's just see if they can go in and give us one more. But they may lean back and create the center of the trend, which should fall somewhere in this area right in here. Now, if that being the case, we got the no touch scenario here. All right, I just don't have the text in it. That's all. So this will be your no close bar. That will be, of course, the no touch scenario with the hard stop. So you really only have 2 shots at it. If they want to make the center of the trend, it will start, let's say, right above the lower portion of the chart. It will start right here. Okay, that's that threshold number 1. And then, of course, this one here conveniently falls right into that lower portion of the chart. All right, so, and that's what you have. That's if they want to lean back and then, of course, lift and take off. Now, they don't have to come back that far. They really don't. Okay, so you had this threshold here. They done tested it like 3 times or whatever, and now there's 4, and they want to take off. Now, I don't like dojis, but that's what they're doing, so let's go with it. All right, so that's a threshold here. All right, now this is all, now, of course, you got this one up here. They just reached into it. The mid is in the middle. All right, so the mid is in the middle of the actual threshold. Matter of fact, let me cut that. I ain't gonna do that. I can't do that. But the mid is in between the 2 lines, the 2 black lines that you're seeing. Now you can just do a little deduction, if you will, and just know that right outside of the mid, you have that threshold. I can't release the specs online. I did tell you that in the message, and I said it in prior videos. I can't, but it's not Fibonacci. And if you just visually know where the mid is at, just kind of gives a little estimation there, and you got it. It's really simple. It's not that hard. It's math. So it's really simple. It's not Fibonacci, and it's math. So you can, just try to figure it out if you would like to. Those that had purchased the DTT suite indicators, it's in there. Just use the pivot range low and high. Just use that, and it'll plot it on the bar for you. All right, but it's really simple. That threshold is important. They didn't close beneath this threshold. I told you I don't like dojis. I don't like it, so I believe they'll run it. Yeah, and they did, so that makes sense. All right, so let's just kind of stretch this forward. They're not breaking the back of this bar right here. Let's look at some of my tick stuff. Let's see what we got. Let's just look over here just a little bit. Just kind of see what that all looks like. Oh yeah, we got some darker green bars here, so they're still holding, and they're becoming aggressive on the buy side of there. And you can look at this too. This is kind of like point of control, if you will. And then that's from another indicator. I just threw it in there, cut the profile off because the big trade has its own profile, so I just cut it off and use point of control on this one. But you can see it. My tools, I don't need this. I'm gonna tell you right now, I code indicators, so I don't have to use this stuff. I don't. I just like to see it in conjunction with what I have. But yeah, they're picking it up, which kind of makes sense. And that's all you do. You just take whatever you have. You don't have to have anything fancy. You just take whatever you have, utilize the information I'm exposing to you, and then of course trade it. So this zone is important. So if you have something, of similar, I guess, use, just look at it and say, hey, when you get there, let me see if I get some volume, some kind of reaction, if you will, inside of that area, slightly outside the mid. You can go slightly outside the mid if they're trading down. So if they're coming down towards you, okay, if they're coming down towards you, just slightly outside the mid, you want to see a reaction, just some kind of reaction, and use whatever tools you have. It really doesn't matter. You can use whatever tools you have. Again, I code my own indicator. So it's really not that you don't need a lot of, I'm gonna say this, you don't need a lot of stuff. You don't. The markets have been doing the same thing before. I don't know, electronic trading online. It's been doing the same thing. It's going to keep doing the same thing. So all the little fancy little things that you can come up with to have, you don't need them. I'm trying to do the best I can to give you some practical information. Practical. It's right in front of you. It's doing it all the time. Here's that threshold. This is a wick threshold. You don't want them closing beneath this lower threshold. You don't want that. So it's like kicking your legs on a swing set, all right, or a pendulum if you're young. Pendulum left to right. This is up and down experience, but it's still physics. It still has momentum associated with it, so it has to go a particular direction. When you're doing a swing set, you're kicking your legs. Yeah, if you kick your legs high enough, well, guess what? When you swing back, you're going to go just as high as equally high as you went forward. That's how it works. So the market is doing the same thing. And so now when you look inside the bars, I want you to look inside the bars for the same kind of activity. Well, I would say this, all right, and this is what I would say. If we're going to go higher, don't go lower. I know they had their outside bars. I kind of get that. There it is right there. You kind of get that kind of activity. But you really don't want them closing like this one. It didn't close beneath that threshold, even though it went out the lower of the bar. It didn't do that. It just swung back this way, kind of giving you the same size of this bar. This bar here is the same size. Well, this one is greater, but nevertheless, the movement is proportionate. And so the same goes to say here, what's reasonable, and this is what I'm trying to make sure that everybody know. When you take trades, just go for something reasonable. That's all. Just go for something reasonable, and that way you don't get stuck. You don't get stuck. I don't like dojis, so they should run this with no problem. That kind of makes sense. So they'll get up there. I just told you I didn't like this doji here. I'm trying to give you some extra information. Please take it with you. I don't like dojis. All right, so I'm gonna go ahead and say that to you. So this shouldn't be a problem. I don't like this, so they should get through it, and that kind of makes sense because there's your target. Now here's your threshold here. That mid, you said, did you miss the explanation? No, you didn't miss it. I probably just breezed over it really quickly. So I'm gonna slow it down just a bit here. Here's your and of course it wasn't on the chart. It's only the two lines that was there. And so I'm gonna make sure that no, you didn't miss nothing, my friend. You really didn't. I probably breezed right over it and touched on it a little bit more in yesterday's video, and you just hadn't got that far yet. But this one should do it. And again, this is a shorter video, so you don't even have to sit there for an hour unless you want to watch the video. You don't have to, and none of you have to actually. Just watch this one. I'll just breeze over this real quickly. The mid is in the middle. I just don't have it plotted, but it's in the middle of those two lines. It is. And so if you look at your bar, just know that the mid is in the middle, and anything, coming across that mid, it just shouldn't be aggressive. If it comes in too hot, it can go past it, and that's not what you want to see. All right. So now this is what I was talking about. They'll come to the back of the pivots, back of the bar, just do a lot of excessive trading. And a lot of people, again, have told me, hey, man, they just always come back. They always come back. It's the environment. That's all. It's the environment. That's all. You got the prop firms out here trading, and they, do that drawdown thing, and it'll burn a lot of you if you're not paying attention to how the movement actually forms. So I want you to be able to see the cyclical activity. I want you to see rotation. I want you to be able to see it so you can trade it effectively without getting yourself in trouble. Let's go back to our previous scale here. Now, this is the, of course, the middle of the scale. They're kind of stalling at it. I totally get it, but I do know they'll run this. I absolutely know that. So this is just an opportunity to build your position and to take this pivot out. It's just that simple. All right, so here we go. They're getting up there. All right, so they ran into this threshold. Notice that they did not close beneath the lower portion of the threshold. They didn't close beneath the lower portion of the threshold. And the thing that gives it away, if they don't kick that stop, that absolutely gives it away. absolutely gives it away. Occasionally, yes, they can kick the stop, then come back up really quickly and, continue on. They can. They just did it with this one. But the thing they may even do it with this one, won't close beneath this threshold, but this is a no touch scenario. All right. So remember, we got to put it all together. Everything I teach you is really holistic. Everything I try to teach people is framed. It's not. I tried to not leave no rock unturned messing with these guys because they'll change it on you in a heartbeat. I promise you they will. And of course, there's more things that I know, but I'm trying to give the public something practical. Here's something practical. This is your attempt number one. If they get through that, yeah, that's not fun. And here's attempt number two. And it seems like they want to give this a problem as well. The prior videos, I told you that this was the no close bar, so you don't want them closing under it. Of course, they did, because if they do, and this is what I did tell you, if they do, sometimes they'll kill your stop. It just depends on where the threshold is at. I'm gonna tell you right now. That's the missing piece from the information that I was telling you before. All right, so the little blue horizontal line. Now, there's other filters I have for no touch scenarios. There's other filters, I promise you. But that's one. That's one. If they close beneath this bar's low, depends on how it's structured, they could probably take that stop. Okay, so just now I'm trying to give you just a little bit more information, and then trust me, there's more, but that should help a lot. All right, so as you can see, the bar reached up into this threshold here. Again, you don't need a lot of indicators. I promise you don't. It's really simple. You just want to see the reaction. Now, of course, the arrows, the pressures that I have on this time frame is according to the 1 minute. The pressures that you saw here, that's according to the 15-second. All right, that's 15 seconds. And this is reading 5-second value. I try to break down that 15-second chart just a little bit when it hits these areas, just a little bit. Want to see what it's doing. All right, so, and again, you don't need none of that stuff. I'm going to show it to you right now. All right, so they're coming back this way. All right, they didn't break this yet. They didn't break it yet. Now, let's count our trend. Did we count our trend? Yes, we count our trend. So now we're going to project it. Let's project it. I don't like dojis. I think they'll go back up there. I do. I could be wrong. For now. For now, these guys, they'll go back up there and get that. All right, so now let's do this. All right, let me just turn this green. Just turn it green. I got a moment here. I'll take and do all of this for you guys. All right, so now, all right, so kind of the same thing. We put this here. We notice the lower part of the scale. That's the center. They're still rotating. And we put these here too. Now, remember, this was the no close bar. You can go back and rewind the video. This is the no close bar. I told you if they're going to put the center of the trend, it should happen somewhere right in here. This is the no close bar. There's your hard. Well, no, I'm sorry. This is the no close bar here, and there's the hard stop. I'm sorry. There's your level. Your level is right here. So this is the no close bar, and they dove into this area. But I did put this box here because they did those 3 tags inside of that information there. So now let's see, because they're kind of putting it on this side of it too. But we have a trend. We have a trend. Now it can't be both. We got a trend down, and now we got a trend up. Now, which one they want to do? Because I know they kind of did that yesterday. Put a lot of big swings in it, like to the upside, and then turned around and took out the trend. So, but let's see what they want to do. Here's your wick zone. All right, this is your wick zone. You want them to go into the wick zone and then turn around. You want them to go into the wick zone and turn around. I don't think you had a problem with this information here, but I'll touch on it. I don't think you did, because you only asked about the 2 lines. You said the 2 lines, and because I had used just the mid before. So I want to just exclusively talk about the 2 lines, but I'll throw this in there just for those that are watching. Momentum is against you until that live bar gets back above the close. All right, so the momentum is against you. Don't kid yourself. Even though they're coming back this way, this is a risk trade. It's different. So if you think it'll turn around as it going to that threshold, you put your stop right there and dare them to hit it and see if they'll turn back around. Do watch the clock, because if they spend too much time back here, clearly they, even though they're jumping up and down, they'll run that stop. So don't kid yourself. Just make sure that you keep an eye on the clock. Now, I think they got a little bit too much time, and they're still pushing a little bit too aggressively. Let's take a look at this information here. I pretty much, them sellers is hitting the gas. They trapped that buyer in there. He was really aggressive about things, and now they're getting them too. So, yeah, kind of got a little bit of information going on there. So, yeah, they're coming down into that. Yeah, they just kicked that stop. Now, let's take a look at this information here. Let's take a look at that and see what's happening with that. Oh yeah, we still got this, and they're pulling into it. They're pulling into this, and we got this right here. I'm gonna just throw this here, and we'll come back to this in just a moment because this is pretty much all they have to deal with at this point. We got this. They're hitting this right here, and they absorbed this whole area, so that's good. They took out the aggressive sellers in this. All right, so now let's bring this back and see can they get back up. Let's just see. All right, let's see what they're doing. Again, they just kicked that stop. All right, they just kicked that stop. This is a no close bar. This is a no close bar right here. When that level comes in, that's the no close bar. Again, if the center of the trend was going to show up, I told you that they can come here, which this is the no close bar, okay, for that level. All right, so let me just make this green so I can differentiate the blue boxes from the actual setup that I was talking about when they were up there. All right. And I told you if they wanted to come back, make the center of the trend just to go higher, this is what you're dealing with. All right. So yeah, we'll make this green too. And they're kind of changing it again. I don't like dojis. I think they can run it. I do. This is off the table right now though. They're done with this bar. Absolutely. They didn't want to do that. They just didn't want to do that. Now I understand. All right, so now this is important. Remember, this is the lower part of the scale. Let me turn this. I'll just turn this red. Let's turn this red, like a light red. There we go. There we go. Let's go with that. That's the lower part of the scale. Really don't want them down there. And then let's just turn that light color. I got to do this because otherwise I get these blue boxes mixed up. And I'll absolutely make a fool of myself talking to you about all of this. So light green. There we go. All right, so there we go. All right, so now they came down here. These are the areas that we were talking about. Now, this is the no close bar. Now, let's get back to that threshold. It's really simple. I promise you it is. I promise you it is. Now, it doesn't matter the color. Here's another thing. It's this threshold here, when they come back up that close, the only thing you really want them to do is take out this threshold. If they can take out the threshold, you're okay. And then this is the wick zone here. This they didn't test this one at all, so so they didn't test it. Now we got this. Now it's fluid, and that's what I was telling you guys in yesterday's video. It's fluid, so it may move while I'm doing this, but when the next bar start, this is what you're dealing with. And the mid is the blue floating line. That blue floating line is the mid. It's always in the middle of the threshold. It's always in the middle. Practical information. Again, I can't give you the specs. Can't do that, but it's some practical information. I want you to take it with you. All right. Doji, I told you I don't like it. I think they can run it. All right. Now I told you all of this when they were up here. I said, hey, if they pull back, want to make the center of the trend, let's put our trend line back there again. Let's put our trend line back there again. So you can have all of this stuff, and hopefully I'm covering it. Now look, they closed inside the wick zone, but they're going to come back out of it. All right, so our 7th bar, I'm going a little too high here. All right, our 7th bar is there. All right, 7th bar is there. Let's get that, make that green. And there's the center of our trend here. Okay, I told you that if they wanted to come back, and this is what they do, they come back. I told you guys that they come back all the time. They do. They absolutely do. You got to know this. You got to kind of already be in front of it. Say, hey, if you turn around, I'll do this. I'll take a little bit here. And then, when you rotate back, I may put in more, And so they hit our zone. Okay, so they hit our zone there. And now they're ripping back to the upside. All right, so they're ripping back to the upside. They're trying to get back in here. Okay, so they're trying to get back in there. And of course, there's that level right there. All right, so we got reason for them to move up, and they may want to go back up there. They just might. All right, so yeah, they're gonna get this here. They may want to get back up here. I know they'll run this. I do know that. I'm not crazy. And so the center of our chart scale, now it can move. I mean, I can adjust it however you want, but just based on where they're at, just where they're at, however big you want to make it to. It's even more bullish when I do this. It's even more bullish because they're above the center of the chart. But you don't have to do that. I told you, chart is dynamic. Wherever the market is going to turn, it's going to happen right in front of you. That's the point of me releasing this information. And so you guys don't have to look left. You don't have to do that. And they're inside this wick zone as well. Now, this is the thing I told you guys on yesterday. I know you probably didn't catch that video yet, Josh, but the information on yesterday, I showed you a red and green chart at the beginning of the video. I showed you a red and green chart with a lot of red and green bars in it. But then there were some bars that had absolutely no color. Those bars, deals with this threshold in regards to they're not exceeding it. So if they're not closing outside of this threshold, now you got the bars that's primarily in bases. They're in the base before the next run, or they're in the turns. And so that's why the threshold is really significant. And you want to kind of keep that in mind, because most of the bars you saw on that chart, I'm not going to put the indicator on the chart. Most of the bars you saw on the chart was red and green, except for in areas where they were basing, where they didn't want to exceed that threshold, like right in here, that doji, and this one didn't want to exceed that threshold. When you see that kind of activity where they're right here, even right here, they're not exceeding that threshold, these are areas where they can potentially turn, just potentially, like in here. This didn't exceed the threshold, so that's clear. That bar is clear. It didn't have any opacity in it. This right here don't have any opacity in it. When you see that this bar here, same thing, it would have no opacity in it. When you see that happening, if you keep eye on this threshold, when you see that happening, you know you're kind of somewhat in a base. You're in a base, and it's possibly going to take off out of that. It's going to take off, or they're going to try to reverse. So there's some profit taking there. There's something going on there before your next push. The threshold is very significant. I'm, again, trying to give you some information to get you closer. You don't have to utilize this prior bar. You can actually trade the bar while it's moving, like the daily. All right, so like the daily. Let's take a look at that daily again. The daily, yesterday, when the bar had came off its high, okay, when it comes off its high and it gets below this upper line, you know, typically they don't post to close, just closing here. They need to exceed it in some manner. So it's either on the outer parameters or above it. You know, they have to exceed the bar. Most cases, that's why I showed you that chart with all of the colored bars, red and green. I showed you all of the colored bars that was there, so you'll know this is your bias. They need to be outside the threshold of this range all the time. They have to close most of the time. They have to close. And so now today, this is today's prices. All right. So let me point to that so you'll know. That's today's. Where'd my chart go? Need my chart. Need my chart. Let me go back and get my chart. Don't tell me I X'd out my chart. Don't tell me I X'd out my chart. No, don't X out my chart. All right. So there we go. In most cases, they will close outside of that threshold, and that is your daily bias. That's how you gauge it. Okay, that's how you gauge it as they're approaching, coming when. Well, the bar is almost done. We're gonna go with the next one. As they're approaching, they're trying to get to that distance. They're trying to get it. They can make it there. As they're approaching, getting back above that lower portion here, this lower part of the range going upward, you know they're not going to close inside of here most of the time. And just like they were on the high here, and then they retreated all the way through that range. I know for you guys, if you don't have the indicator, use their mid. Just look at the mid of the bar and say, hey, if you go just a bit more, chances is you're outside that threshold, and you'll finish the bar in that manner. Now, can it go again? Can it go back in the opposite direction? Yeah, it can, but you can trade the fluidity of the bar. You can. If you're coming back through this threshold, just off the bottom of the bar, heading back into this threshold, just look at some tools. If you have them, I have them. If you have some tools, just look at it and say, hey, or just look at the bar. If someone don't want to use anything, that's fine. Just look at the bar and say, hey, look at the clock, look at the bar, put them both together. You're heading back this way. There's a high chance that you can stay outside that threshold and finish the bar at least bullish. So if you're closer on this end of it, you should be net positive, at least outside of this threshold, at least, okay? At least, because you don't want them coming back beneath the lower portion of this threshold. Just like here, they're above that threshold. Hopefully you would take it, clearly, this is when you take it. I'm gonna tell you right now, this is how you take it. Live bar here, jump above the close. That's when you take it. No sooner this bar, tick down a couple ticks, then go back up above that close. You can take it. You can absolutely take it. Sure, it can rotate back in here, and that's why I told you guys on yesterday, 30 ticks is like a rule of thumb. But I know if there's some volatility, it can probably do a little bit more than that. And if that be the case, then yes, the threshold absolutely trumps that information. So, but yes, once it leaves the close, and ideally, and I said this in yesterday's video, green on green is really easy. When you got that red green trying to make a turn, green red trying to make a turn, it's a little bit more challenging, if you will. Now the threshold does move a little bit until the bar close. All right, so let's see if they'll reach down here and then push up again and make our trend distance. And then that will be the conclusion of it. I'm trying to make sure that trading is really, really simple for you guys. I don't want to make it hard. It's not hard. It's really simple. It's something I do every day. Every day. Wake up and just do the same exact thing. I suggest you do the same too. Don't go doing a whole lot of changing of what you have when it comes to information. I know you guys are coming into my content, but I can honestly tell you, if you're winning, and that's why I said it on most of the playlists. If you're winning, it's this. Is this? You're just not aware of it. So if you've been winning, this is what you're doing. You need to be made aware of it. It's this. That's all. Because it's the market. It's what the market does. It's been doing this before electronic trading. It's physics and it's money. That's all. Is you I know it's interesting, but you combine the two, you combine the two, it'll work. And that's whoever made this experience. And it could have been a collection of a whole lot of individuals, whoever made the experience. I think that was interesting, to say the least. I do think that this whole trading thing, I'll just say this, just while we're waiting to them get outside that bar and hit that distance. Trading, this is just me, just giving my honest assessment of trading. Trading is your modern day oppression. And I'll just say it that way. Because you have people that need more or want more for themselves and their families and the people that they care about. And of course, you got your greedy, selfish people. Trust me, I got a fair share of experience with a lot of those being on YouTube. You got a plethora of people though that come to this space because they actually want just a bit more than what they already have. Okay. And unless they have the understanding, how can you oppress someone unless you keep them ignorant? So you have to make sure that they don't know what's happening. All right. And so I'm trying to do my best. And that's why I say hit the like button. Hit the like button. I'm trying to put something in this space that's practical, something that's reasonable, something that's you don't have to, try really hard to understand. A lot of the information that's online will take you in so many different directions before they get to what's really transpiring on the chart, that's always happening, that's not subject to my opinion. What I'm telling you about the chart is not my opinion. I'm telling you what you can absolutely see. And we can't ignore it. We can't ignore it. They're reacting. They're always reacting. This is cyclical activity. It's cyclical. It's rotation. It's physics. It's always doing the same thing. These are fundamental principles. Majority. I talked about majority all over the channel. Majority is a fundamental principle. It's a truth. It's just like gravity. Whether you're 700 pounds or 70 pounds, it's still going to work. It's not going to stop doing that. And I'm trying to make you guys aware there's principles in the chart and you can't ignore them. We can build whatever. I build tools around this stuff. You can build whatever you want, but if you don't regard the principle itself of how it works, your signals are not going to hit. They're not going to give you what you want. They're not going to generate based on what's actually transpiring. Yeah, you'll get an occasional MACD cross or moving average, whatever. You get that RSI overbought and it still keep going. You'll get that stuff. But at the end of the day, if you don't account for what these guys are really up to, yeah, I can assure you, you're going to have a hard time getting this stuff to work. And of course, those that know, they're benefiting from what you don't know. And so you'll always be in a state of oppression. And I want to see a lot of you get out of that. I do. I'm going to do my best to help you. Do your best to just hit the like button. Try to help someone. Help someone else. That's all it's about. Help somebody else. Help somebody else. I'm going to help you. Help somebody else. Help someone else. There's a lot of information online. Again, I'm not saying that any of that stuff can't be utilized. Yeah, you can. You can utilize whatever you want. Just understand the fundamental truths about the market, because it's just like gravity. It's doing the same thing. It's never going to stop. Let's see, can it get there? Here's our test here. I told you only have 2 shots with the no touch, no close. So wherever you're seeing this level, that's the no touch, no close scenario. So you had this one. They didn't close under the bar. Should they let's say they wanted to lean back and just give you something just a little extra. It'll come into here and it should turn. Okay, well, they're going to do it. All right, so Josh, I hope I answered your question. I know I kind of gave you a little bit more rambling there, but I want to make sure I fill the video with some information. And some people may find some of the things that I'm saying useful and not just the chart. It may help them mentally to endure the challenges of doing this, and they need to know they're not alone. And so I want to make sure that you can see that. All right, so that's my time with you. Again, we want to make sure that we're looking. Let's look at this daily really quickly here, because I do, and I want you to take a look at that market analyzer. I want you to have this information, and so you'll know what we're up against. All right, I want to make sure that you know they still need to clear. If they close here today, that'll be good. That's a good place to go. I would like to see them get up here and close. I really do. And then of course, then from there we just need to tackle this. I told you guys, you really don't want them to break this. If they do, they'll come all the way down here. They will. You're not out of the neck of the woods. You got a trend here. This is a trend. This is no more than them pulling back. Okay. But should they want to reverse it and make it go back up, that will be, I mean, absolutely spectacular. And it can go back up, and it will go back up. But if they don't, yeah, we're gonna run into a major problem. But let's see. There's your range. I know I released that range too. I don't know if you guys took a look at that. I'll blow up the chart and let you take a look at the range too. For those that's new, I gave you guys some ranges, and I told you I've done my homework for many years. And trust me, I know what's happening when it comes to even the time that they put this information out. Here's this morning's range. Okay, that's this morning's range here. Kind of got a little fussy on the way up, but they end up, of course, turning around, driving down, and then they came in on that bottom. There's your nasty business right there. And then, of course, they pushed up, cleared that range, played the backside of the range. So you can kind of combine those price levels of that daily threshold, if you will, with the range. Just combine that information. And then from there, you should be able to get your trading to work. All right. So I wish you all the best with your trading. Take care.